Okay, welcome everybody. My name is Jason Jones. I'm one of the co-founders of LendIt, and I'm happy to be here today to present the digitization of finance, how customer expectations are changing. Today we have three co-founders and CEOs and COOs who represent online lending, digital banking, and robo-advisory. So come from three different worlds within Fintech, in each case using kind of a digital strategy to challenge the incumbents. So with this panel, we're going to talk about what it means to compete and succeed in the world of digitization. With that, I'll go down the row and let each of you guys introduce yourselves, starting with you, Peter.
Good morning, everybody. My name is Peter Behrens. I'm, as Jason said, a co-founder and COO of RateSetter, which is a peer-to-peer lending platform in this country.
Thank you. I'm Anne Boden. I'm the founder and CEO of Starling Bank. We're a fully licensed bank in the UK, and we've now started passporting across Europe. And we provide current account banking, and we hope to coexist with lots of these other organizations in providing consumers with a real alternative.
Hello. Yeah, hi, everybody. I'm Giovanni, co-founder and CEO of Moneyfarm. We offer digital wealth management service, so we help people basically invest, and we are one of the biggest robo-advisory platform in Europe.
Okay, great. So thank you guys all for being here. Let's start off with a general question, which is, I guess, let's start off with why you started your businesses and how they, why you went digital right away. How is that giving you the advantage over the incumbents?
RateSetter launched, Ridian and I started talking about RateSetter in 2009, and we felt that there was an opportunity for market-based funding in this country. We felt that, let's not get too micro about it. Broadly speaking, the opportunity was to put together lenders and borrowers. To do it online was the obvious way to do it. I don't know if Fintech is slightly overstated. I think I would argue that this is just the way that a modern business looks to sell its product to its customer base. And it basically brings them in, the distribution quickly and inexpensively.
Thank you. I have a sort of background working for the big banks, the traditional banks. I was head of EMEA for transaction banking for ABN AMRO. And after 30-odd years in traditional banking, very much in technology and operations and transaction banking, I decided that we no longer could capture a customer with a current account and then cross-sell and upsell lots of other products. Customers wanted choice. Customers had lots of information, and they wanted the best products from the best providers at the right prices. And instead of trying to control the whole customer relationship, instead of trying to sit in all those meetings where you try and work out the number of other products you'd sold the customer, what about an organization that's very customer-centered? And Starling Bank is all about that. We started in 2014 with a very new entity, with a new banking license, with very new technology, built from scratch. And our proposition is that we sit at the heart of the customer's relationship, and we work with other providers that can provide the best products to our customers. So digital for us was all about, it had to be. You can only afford to provide these services at scale if you are digital at heart. And a digital relationship is a very strong relationship. We touch our customers several times a day as they use their contactless payments, as they make faster payments, and each time that touch point is a chance of actually giving the customer something back, something enriching, something that helps their financial life.
So I think my story is I was working in Deutsche Bank. It was very, very easy to understand around 2009 that the industry was going to be completely reshaped. And I was a big believer in the power of technology to really change both of the business model level and also on actually of the service level And my expertise has always been in wealth management and investing, and that was an industry where really was no giving the right benefit for the consumer, which is also a huge problem that we're probably going to face in 20, 30 years. So the possibility of really using technology to derive a better service at a much better cost for the customer that ultimately gives them better outcome was clear to me, and I think that is still, 5 years has been passed on, and it's still very early in what we could really see in how technology change, and even like how new way of thinking around the customers and suggested really change the way financial services are built and sold.
Okay, so Anne, you mentioned that your customers visit your site several times a day. We have 3 very different companies here. I imagine the lending companies, once you take out a loan, you don't necessarily need to engage as frequently. And with Roboadvisor, you're probably not doing it several times a day, but maybe a couple times a month. So, so the user experience for all 3 of your product offerings must be very different. So can you talk a little bit about how you engage your customers and how the user experience may differ given the time, frequency of visits?
If I start by talking about what customers now expect, we're going through an era where, as well as having excellent 24/7 service through lots of different means, they want instant notifications, they want to be able to make a payment and be told exactly what that balance is going to be adjusted to, and how much that cost in foreign currency, blah, blah, blah. But they also want to be part of the story of building something. Banks and fintechs now have to be open to thousands of people who want to be part of building the proposition. So we have a very active community of people who debate all night long what the next iteration of the product's going to look like. So I think we're going into a very, very different world which is very different to the world I knew sort of 10 years, 20 years ago in traditional banking, where customers expect to be part of the creation of the product, expect to be serviced the way they want to be serviced in various different channels, and also want to be able to be heard and actually dictate the sort of relationship they have with the organization. Some people want no interaction whatsoever. Some people want a rich interaction as part of community sites and that sort of more complex relationship.
So Jason, you made the point that the lending customer has a different need of a different sort of experience and service, and I think that's right. In that our borrowers, you're right, they come to us, we need to provide them with the process and service to get them through the platform as quickly as we can, and they don't come back that much. But our lender community does spend a lot of time on our site, and RateSetter is completely committed to a retail investment offering. So all of our lending is done by individuals. And the other point about our lending is our lenders are setting the rates. These are not rates that are set, if I go to a high street bank for a savings product, the bank determines the price I'm going to receive for my money. On RateSetter, our customers are setting the rate. So there is a proactive market underpinning the whole thing. And our lenders are actively engaging with that process. And we have seen, for example, over the last month, our rates have gone up quite a lot because the platform has grown quite a bit. And that is because our lenders are proactively playing that game. So we need to have a very live dialogue with that customer base. We need to be able to give them the information they need to make these investment decisions. And we need to be permanently available. And that goes back to the 24/7 thing. I mean, obviously the website has to be open 24/7, but you have to provide the correct sort of level of customer service support to support a relatively sophisticated customer. And I think these are all challenges that are much easier to address through modern digital technology than arguably that would have been the case 20 years ago.
Yeah, from our standpoint, I think that what really changed is the way, particularly in our industry, that traditionally the wealth manager was the guy put on a pedestal and telling you what to do and so on and so forth. So trying to bring the relationship back to earth, like having almost a level playing field on both positive and negative things, which I'm sure it happens to all of us, when early days platform doesn't work properly, you kind of get the customer engaged in the problem and they know you're working as hard as you can to find a solution. And I think that really switching the relationship from a company to a small human guy, one of our million customers, versus somebody that really can deal with you and engage with you on a peer-to-peer level really changes the dynamics of the way we interact with customers. And that can be done digitally over the phone. We are a hybrid model, so we really serve customers across basically, aside face-to-face, all of the channels that they want to be served. So we're very agnostic about that.
Okay. So can you tell us a little bit about where you generate your leads?
It's a very broad church. So we lend to consumers, we lend to small businesses, and actually we lend to property developers. So the principle of the way we look for borrowers is it's always about trying to find the source of the place where someone is looking for money, as opposed to trying to just blanketly go above the line and suck in a random assortment of people. So it's heavy broker relationships, it's big arrangements, relationships with aggregators. Our business is building such that actually direct traffic is now starting to just find us. So it's very broad. I think the investor side is very interesting because it's still heavily led by referrals, relationships, and the network effect, and the sort of PR pickup.
I guess when I think of your company, I think of tight integration with the price comparison services like a money supermarket. Tell me, how important is integrating with a service like that?
I think in the sort of digital lending space, it is becoming. I mean, it's always been important, but it's becoming hypercritical because the price comparison sites over the last 5 to 10 years have iterated from just being a sort of a list of prices to a place where they are actively telling the customer how eligible they are to get the loan. So the experience now is very much of the potential borrower lands, they get told how likely they are to get the loan because of tight integration between the credit policy that we hold and the understanding on the price comparison site, and it's delivering that journey ever more effectively. And one could argue that 5 or 6 years ago, price comparison was a very blunt tool for loans. It's becoming an incredibly sophisticated and good tool, which is producing a materially enhanced consumer experience.
Great. And you guys launched just earlier in 2017. So how has the growth been so far, and how are you generating leads, and what are the great sources?
It's a combination of things. You obviously got the early adopter market and the wait list, whatever, and those sorts of people tend to have accounts with all the new banks. We had a huge percentage in the early weeks of investment bankers and fintechs and press, whatever. But then once you go past that sort of period, we're getting 1/2 of our sort of referrals word of mouth, non-incentivized people telling other people. We heard a story yesterday about a train driver and a submariner basically discussing about Starling on a channel which was not our channel, and telling people about the product. So we've got quite a diverse group of customers that are not necessarily short-extended. And those people are telling each other. Of course, the comparison sites and such like are important. And we're finding at the moment, because we're a new product and we don't necessarily fall in a particular category, those sites don't necessarily are the best places for us to appear. Because what we are doing are things in a new way of presenting ourselves that never been done before. We actually did our own comparison site at one stage a couple of weeks ago when we wanted to demonstrate the lack of transparency in overdraft pricing. We decided to generate a site where you could actually key in the overdraft you wanted and really show which of the competitors would give you the better deal. And that was featured on, Which and such like. But it is quite difficult when you're actually changing the boundaries of where a product is defined to actually to be, for those sites to be profitable for you?
Yeah, I think from our side, I mean, really, you generally from hopefully here, I'm sure there are a few people who are not yet customer of Moneyfarm, and really is a combination of trying to create awareness. Press is usually important, I guess, because particularly for us, we have to ask you for your money, so it's really something that you need to trust us, rightly so, and still a lot of people perceive that if you are on the newspaper for some reasons you are trustworthy, which I might not be 100% agree with, but it works, and I guess that a combination of creating that level of trust awareness, again, putting ourselves in person to as the face or the people talking behind the brand, like ultimately it's very important as well, and really for us it's about content and explaining that we know what we do and we have the skills and knowledge and capabilities to really make the best out of your money over the long term, and that's hugely important for us.
Can you give us a sense of the size and scope of Moneyfarm?
Yeah, sure. So we are about probably close around 300 million pounds of AUM, and we're about 25,000 customers across Italy and the UK.
Okay, I didn't catch what's the AUM?
So we're 320 about this year.
Okay, congrats. Why don't we kind of, if you all could give us a size of this scope of the size of your overview of the size of your business.
So we've got about 400,000 customers, and I guess AUM is a very good way of describing what a peer-to-peer loan business looks like, and it's about £675 million.
Okay.
Well, we are in the early stages, but we are definitely sort of more than you and less than you. We hope very much to be about 100,000 at the end of the year.
Wow, 100,000 in just 1 year. Great. Going back to the engagement, if your business is engaging with customers several times a day, it seems to me that with kind of the launch of PSD2 and the rollout of 50 digital banking platforms that are out there that are engaging multiple times a day, you guys will become an important source of leads for the other players on this stage. So tell me, how do you guys view yourselves within the fintech ecosystem? And when you think of lenders or robo-advisors or insurance companies, how do they play into the long-term strategy for Starling?
For us, we're a fully licensed bank that intend to be sort of the Amazon of banking, sitting as a financial hub in the middle of an ecosystem. We're the first current account and only current account in the marketplace at present in the UK, but others will come to market as well, and I should imagine there'll be a couple of us that provide an infrastructure for other fintechs and other lenders. We have a marketplace where you can actually, sort of join today, whereby we will generate customers, and our customers we're a scale player. So we have hundreds of thousands, millions of customers, hopefully, and we will have regular relationships, say, every time there's a contactless payment with a customer. Then you'll have in our marketplace providers of product where people only touch those products, say, once a week or once every 6 months, whatever. And we both will create customers for each other. I very much hope that the people that join the marketplace will come with customers, and that we will generate customers that generate business for our marketplace partners. We launched Flux, a receipt marketplace partner, several weeks ago. And what Flux does is provide receipt data into your statement. So you go into a sandwich shop and pay with your card. Immediately, all the receipt data saying what sandwiches you bought and how much your coffee cost into your banking statement. Within 3 or 4 hours of launching that, 1,000 people had signed up. It is how the parties and the various people in the relationship all bring their own customers to that relationship. And, a single startup on its own can't, it's going to be really, really tough to build the critical mass and scale of a Barclays or an RBS. But these ecosystems, each bringing different people to the party, could actually be that viable alternative. And we've heard about open banking here this morning. Open banking makes that all possible. I spend a lot of time working on PSD1. PSD2 is going to be very, very powerful if it actually happens on time. And I think that's a big challenge. But in the meantime, people like ourselves are going ahead anyway. We have PSD2 compliant APIs today, and we very much hope that we can be the viable alternative, a group of people together, not just one entity.
We'll definitely get into that. But before we do, I just have to ask the other panelists here, do you view the digital banks, the startup banks, as important platforms for lead generation and partnership, as Anne describes? Are they an ecosystem?
I think probably not now, but in the future, I think that I think that from my perspective, wealth management is not necessarily the first service you look for in a marketplace as a customer, because maybe transactional data, what you're used to, it's more closer to also the level of trust that you require is kind of it's grown up before giving 100,000, 200,000 pounds of saving. But ultimately, I think us as being we will very good, well positioned to really employ and partner with them. I think we're already talking with Anne as well to do that, and hopefully will be, because also our DNA and our talent and people working together, it's going to be much easier for us to be there rather than goods, I would say, in the very short term. So definitely yes.
The short answer is yes. I think it makes sense that if people have got, basically the modern challenger businesses, i.e. businesses like Starling, seem to me to be at the moment making a major play on the fact that you are building a customer base and you're not really looking to monetize products off that. And therefore there's a lot of people that are actively trust these brands to a degree, and it's how can we provide them with product that is useful to them. And I think that it absolutely should be something that becomes natural and easy for us to do. So yes, I do look at them as being logical partners of the...
Okay, but let me play the devil's advocate here, right? If Anne gets 100,000 customers in 1 year, that's an amazing growth. But who controls the customer? Do you still feel like you have a relationship with the customer, or are you giving up control to an aggregator like Starling, or even a traditional bank that chooses to do this?
I think that'll depend a bit on how demanding and how difficult from my side of the fence Anne chooses to be on her side of the fence. I think that these are going to be new relationships, right? I mean, the whole open banking piece is going to be about if it's I land here and I can get a product from here, and here. How is it remains to be seen how it is determined who actually owns that customer,
right.
And it's all going to be around basically you've got economics, you've got product, and you've got marketing rights, and the whole thing's going to go into one great big pot, and we'll spit it out with some sort of commercial agreement.
What do you have to say, Anne?
The important thing is that people who play in our marketplace maintain their own brand. I sometimes say that marketplace is a bit like Borough Market. It's full of interesting things, quality goods that people come to browse. The marketplace is good as the participants, a variety of participants. And it's very, very important, those brands and those personalities of the fintechs and other companies in the marketplace. It's very, very important. This is not about white labeling. This is not dumbing down and everything sitting behind Starling Bank. This is about having great brands and great personalities in that marketplace, and being able to make all those services palatable for more people.
So it's not really about Amazon. I mean, because Amazon, I will never know who's behind Amazon. I just bought it from Amazon. Yeah. So in this case, will be my wealth management. I bought it with Moneyfarm through Starling, I guess.
So you mentioned in our prep call, you mentioned a scenario that I had never thought about before. And I'm wondering if this is just kind of, would this actually happen? Where a bank like, HSBC, you may have your checking account at HSBC, but Barclays may come out with a better mobile app, and you may use the Barclays mobile app to access your HSBC checking. I never really thought of two major banks kind of combining through PSD2, but is that just a scenario or is that actually happening?
And, subsequent to our prep call, HSBC have launched a new app which actually consolidates other banking relationships into the HSBC app. It's going to happen, and the fittest will survive. And the open banking has huge possibilities. It is incredibly difficult to happen, both from a technical perspective for the big banks and from a cultural perspective. Imagine being in the situation where you're sitting in a Barclays or sitting in an HSBC and you're sitting in a meeting and somebody says, we're going to sell Lloyd's mortgages. Imagine what, is that going to happen? So that's why organizations like ourselves that decide what they're going to focus on. We're doing current account banking for personal and business and everything to do with payments. We're not going to do lending, we're not going to do mortgages. And therefore, we can bring the best products together and basically build our customer base by having great products in our marketplace, and together we can be strong. But I think we're going to have the situation where you may have the best back end together with the best app in the marketplace combining, and the customers will decide, not us.
By the way, in the States, account aggregation is pretty common as well. So if you look at a normal big bank in the States already does account aggregation in the last 5 to 10 years. So.
It just seems like a huge opportunity for all of you guys to find the best apps and partner with those best apps, because they're the ones that are going to consolidate all the users eventually, and will become a great source of leads. Great. Let's talk a little bit about the idea of invisible banking. That was a cool topic. Why don't you describe invisible banking, how that would work?
Traditionally, banks want to be in your face. You have an app that you have to go into to do banking. I think the natural progression of open banking, PSD2, this sort of aggregation of services, is where all those payments and all that management basically becomes something that happens in the background, not something you do. And being able to go into a shop and walk in, pick up the goods, walk out, and everything gets paid for. And to have certain artificial intelligence and machine learning to guide whether you're getting good value. All this is very, very possible and very sensible. So we're having a war about who controls the app. Is it going to be the HSBC or Barclays with the best app? Who's going to be the rails and who's going to provide the customer relationship? I think as well as a marketplace trend and a platform trend, we'll have the invisible trend, where whilst we're all worrying about who controls the app, something happens elsewhere. And we basically become all those payments, all that management takes place without it actually having to do anything. And I think that's the next evolution.
What do you guys think as a robo-advisor or lender about a world like that?
I think from our perspective, I think our service is again different. So I agree completely with Anne with payments, and that it's mostly transactional services that you just wanted to make it happen. You don't really care about who does it or when or why. Just you want to send money to somebody else, and that's it. From our standpoint, I think our customer wants a little bit more clarity on what we do and transparency and how it actually works, because ultimately it's a big decision we're making for them. So our job is going to be really to simplify that as much as possible and using the technology to make the best choices behind the hood, basically, showing the outcome to the customer, basically.
I might be being a bit stupid, and I probably am, but it seems to me that if you make this thing completely frictionless and completely invisible, the sort of general consumer paranoia about cybersecurity and all of this good stuff is such that might get in the way. And I know that, on a test of 1, I personally find it comforting to feel like I'm in some sort of reasonably secure process, and that this is protected, if you like. And so the world where my iPhone sort of takes my iris and says, oh God, today's the day when you want to move that payment, is a thing that I think consumers are going to take a bit of a time to jump to. because I think we still associate banking with risk and structure and security and all of that important stuff.
Can I make a comment about cybersecurity and what's happening in open banking? Sharing passwords, sharing credentials is a bad thing. And there's going to be an interim period pending the implementation of the standards where that is the only possibility. But in a world where you have OAuth protocols and you have tokens being passed around instead of passwords, it's safer. And the number of times that we have huge misunderstanding in this world that's actually been created by a misinformation about these things, it's scaring people. So I think as an industry, we need to start working on education because unless we start implementing some of these new methods and new technologies to control data, the customers may feel they're protected, but they're very, very badly protected.
Yeah, also I think that cybersecurity, number one risk is actually people, like handling data and those are things that sometimes we think about the technology behind it, but the reality is that most of the vulnerability lies at the people level.
Okay, my last question is just, since we are talking about the customer experience, what's the one thing on your website that, or your mobile app that, what's the one design element that has been most effective for your business?
Should I start?
Anyone?
The most unexpected
Yeah.
feature. We never expected people to actually use the current account switching service. Throughout our fundraising, throughout building Starling, we kept having to say that Starling could start out as a second account, is going to be something that people use alongside their existing account. And we explained this time and time again. But we built a feature which would be current account switching, which where you enter in your sorting code and your account number, and you press a button and all your details transfer. And we were the first bank to build it on a mobile. And we were very, very we thought we had to do it. It was the right thing to do, so we built it. We never knew that it'd be so popular. We have people using it to close accounts at other banks because those other banks are insisting people go in to close the bank account. So we have people using that function much more than we ever thought. It was something we thought would be nice to have, and it's been very, very useful. But apart from that, what surprises us most is people love playing with features. We have something called savings goals. And we are finding that on a typical day, people move money in and out of their savings goals numerous times and keep changing the photograph, symbolizing the next purchase. Totally logical, but people love it.
I'm afraid I don't have anything quite so profound, or not as exciting as that. I think in our case, 8 years in, I think it's more just a case of every time we test and learn and improve the journey, it just makes an enormous difference. And you keep thinking, oh, this is brilliant, we've made this uptick, but actually it's just keeping going and incrementally improving the journeys you put the customer on.
Yeah, I mean, based on our previous conversation, I feel like the way you've optimized your integration with Money Supermarket is a good example of what, that has really drove business for you.
Yes, absolutely, has completely driven business. But I think, yes, and but every time you think you get to sort of maximum capacity, the internet never ceases to surprise, and you keep working out that if you change this and move that button and do the other, the changes keep building on each other.
Yeah.
For me, maybe I go back to an earlier story, something that surprised me, at least when I started, I honestly thought it would be complete e-commerce platform, technology only, digital only, and so on and so forth. And then when we start putting the opportunity for people to contact us over the phone, it really makes a huge difference. And actually people will love that. Something that I wouldn't do personally, but it's something that, particularly for that level of wealth and decision making, if you're not too expert about money, is something that it really changed our growth path and also was really, really very well perceived by customers.
Great. Okay, with that, we are done. Thank you, everybody.